The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Lewis. Feeling good, Billy Ray. Let's take a look here. We got the DAX, as you can see. We finally broke out of that trading range to the upside. Whether this is going to be a continuation move. We will open at 20,000 in the Dow Jones today unless something dramatically happens in this next half hour. We need the Dow to be up 70 points, and we're up about 103 as we're looking at it right now. By the way, yesterday, the last 10 minutes of show, I want to apologize. When I'm here, I'm multitasking. I have a computer here that I have my orders on, and it alerted me that something was wrong. And I had made a quantity error on a buy-sell trade, and it was telling me that I had put in more than I had assumed that I would do. We have a setup. In other words, you can't trade more than X number of contracts without the thing turning on. So I had to take care of that error, and that's what the problem was. So I hope that doesn't happen again, but it will. I will be doing some things where I might have to take a break here and there, and we'll see what's going on with this. I wanted to start out the show with. I wanted to take a quick look here. You'll see here the. Hold on one second here. I wanted to put up the. Oh, that's not the right one. Hold on. Yeah, I do. Well, that's not it. Nope. Shut the front door. Okay, let's take a look here and take a watch. All right, first thing I wanted to talk about is the first thing they were talking about today was the death of the VIX index. They were talking about it both on CNBC and Bloomberg, the fact that it is a useless index and it probably won't even be in existence almost that bad, but not quite. Anyway, let's take a look here at the DAX here, this VIX index over the last 5 or 6 months. I just wanted to show you because we're seeing gap downs in this, and that's not unusual when you come into a spot where the market could rally from. You'll notice that we had one of these back in October. We had one back in August or September. If you go back and look at it, you'll see that some of these major bottoms. Now, we're going to probably make new lows in the VIX index itself today. We were close to it yesterday. Whether that means a whole lot or not, it must, because the Dow is going to hit 20,000. I don't think that's going to mean a lot, but, these markets have a tendency to make you humble, and of course we know that they can do that. But if you'll go back and check, when you see these exhaustion gaps like we're having now in the VIX index, those are something to pay attention to. There is something very, very important that has happened overnight. Now, it's important to me. It's probably not important to anyone else, but I'm going to show you the next thing. This is from the CME site, Chicago Mercantile Exchange. What I'm looking at here is the okay. I don't know what the contract low was in the VIX. You're saying it's at 10.8 last. I think I think below 11 was a new low, as I recall. But if we take a look here, this is the open interest figures and volume that comes from the Chicago Mercantile Exchange. If you look at the far right-hand corner where it says minus 1,500, folks, that means that market went up on a drop in open interest. That is not bullish. I know it's going straight up, but this is the same thing what happened to gold and silver and other markets that we've looked at too, but especially gold and silver back in 2011. So we'll watch that. Here, thank you very much, Basil. Basil Chapman has just told us that the all-time low in the VIX was in December of 2006 at 939. So that's pretty close. And then Steve Rhodes is probably going to tell us the spot low is at 860 for October of 2006. So we're in that ballpark where we might get to it, but we'll see. But we will hit 20,000 today. Those of you that watch CNBC in the morning, they're passing out the little red hats. And We will see if we'll get one for everybody here at TFNN, but I frankly wouldn't waste any time, to look at it, because it frankly is a very slim chance. You probably, what you could do is just go to a hat shop and have one made if you'd like to have one. All right, let's take a look at the currencies here for a bit. Oh, I wanted to show you the long-term weekly chart on the VIX. I don't think it makes any difference here. Well, it does if you're in the VIX, of course. But you'll notice here we're still at these levels of the 1.618 expansions from going back over a year and a half. So anyway, we live in Camelot. Thank God. We'll see what happens here. Okay, now we want to look. How low can it go? That's correct. That's correct. All right, now let's take a look here at one of the things that we want to look at. 12806. Well, we're down in this area, but we'll see if it's going to be the case or not. Now, there's going to be another interesting thing coming in this morning, is the fact that I'm going to go through the Dow Jones here, because the Dow Jones is going to make a new high today. We are going to hit 20,000. Let's just walk through where we were day before yesterday. As you can see here on the 22nd, we came down. We made a perfect 61% retracement. At that point, from there, you can see we had the big rally yesterday. That took us up to 19,900 almost, just within a hair's breadth of that. And this morning, when we look at this, we were looking at and this isn't even updated. We're now trading above 19,960, which means the Dow itself will be doing it. We got a caller in from the wet part of California, Brent from Martinez, California. How are you today, my friend?
I'm doing well, Larry. How are you today?
Good, good.
It's great to talk with you. I wanted to talk about gold, if we could.
Sure, you betcha. That's got that on my radar for sure.
Yeah, I know you've been talking about the harmonic number of 17 and 34, and I just thought it was interesting to see that. Well, that's kind of been the retracements we've been having, but I mean, it hit it spot on. I had on the GCG contract about, I want to say it was around 7 o'clock yesterday. I was looking at a 5-minute chart, but it hit 1217.50, and then I had the low this morning at 1200.4. So that's spot on and within one tick. So I just wanted your opinion on that.
Well, I will tell you what I'm looking at. I'm looking at, hopefully, since we've had such a big move here in gold since the bottom back in December, when we've rallied, $90, $95 an ounce. What I'm looking for is a 382 retracement. That would come in at 1184, which would be down $34. Twice the, harmonic number is 34, 2 times 17 is 34. It's also a 78% retracement of the low that we made, way back in early January. And it's also a 1.27 expansion of the last 5-day range, too. So this is what's going to be important to me, that it gets that level. Oh, stay with us, Brett. Stay with us, please.
Sure. Okay.
Yeah.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back with Brent from California. Brent, we're talking about gold. What I'd like to mention to you, Brent, if you'll take a look, if you get a chance to go into the Tiger Den today or check your email, because I've sent this chart out to you this morning, and that is the weekly gold chart. And what's interesting about this chart is the fact that it is really set up to have a fabulous move. Now, this is my opinion, and I'm going to explain to you what I'm looking at, because we've now come below 1,200, correct? We've just broke below that 1,200.
Yep,
okay, yep. So now we're down a little more than $20. That means we're $14 away from where we would like to see this gold stop, and we're coming into a new moon on Friday, which will be the Chinese New Year. So early next week, if we can stay above this 1185 area, what you're looking at on the long-term weekly is a perfect head and shoulders pattern in gold, where the right shoulder is a tad higher than the left shoulder, which is very bullish. It's coming in at exactly within $4 of an exact 786 retracement of the whole move from last year. It's also a 20-man line coming in from 2015 and 2014. So all of these things are set up, and that would be a 382 retracement. So if it does that and then takes off, you could be looking at something really big in gold. Now, I don't know if it's going to happen now, but, you know, like they say, chance favors the prepared mind. So that's what I'm looking at right now.
That sounds like it could be a potential, real nice setup. I do have a question for you.
Sure.
When you're setting up your trade, how much leeway do you give yourself on these fib points? I mean, what kind of range do you allow to, as far as,
in gold,
exceeding that range?
Gold would be about $8 would be in maximum, because you're looking at a contract that's worth $120,000, so you're risking roughly $800. But remember, when gold moves, it moves in increments of 10, 20, 30, $40 an ounce quite quickly. So that's what you have to do. As you know, one of the things that I like to do is we get down towards that 1185 level. What I'll do is I'll go down to a 30-minute chart and then also go down to a 15-minute chart to see the patterns as they come closer and closer. That also gives me an idea of whether my numbers are correct. And of course, we're very wary of these really wide-ranging bars, because if we get these wide-ranging bars, then we're going to be looking at something really maybe even spectacular to the downside, because if everything starts to break, all we just had was a 382 rally in a bear market. That's what it could be. The head and shoulders will fail, and we'll know that from that level. So we'll see how it ends up.
No, sounds good. Thank you, Larry, for sharing that. It's something worth watching for sure, and we'll see how it plays out here going forward.
Well, I'm looking at it very closely, and as you know, you'll be getting the updates in the middle of the night like we usually do. But this is one that should be worth looking at. Remember last year, December, we were chatting when gold was down around that 1030 level at the 3 drive to a bottom in December of 2015, and that ended up being a really huge move. And I think there's a possibility that this could be the pullback that allows you to have a very good low risk. But right now, we're only $11 away, because we're trading at 11.97 right now. So that means we're $12 away, $13 away. I don't want that to get here today, because if it gets here today, that's going to be telling me that, it's probably going to correct even more. So we have to make sure that the pattern lines up with the ratios, and also that we don't have any really, really wide-ranging bars. And a wide-ranging bar in gold would have to be about $20 an ounce. So if we had a break of more than that gold breaks more than $20 an ounce in one day, going below 1185, then I think we have to wait and see how the 618 will hold it, and that would be down another $20 at 1165.
Okay, yeah, it makes perfect sense.
Yeah, it's all about the risk control. That's really what you're trying to do. So we'll see how it works out.
Yeah, it's been a good trade so far off that bottom, and now we'll just be patient and let things play out.
Okay, thanks a lot for calling in, Brad. Hey, by the way, how's your weather? You still getting a hit pretty good?
Oh, man, this has been one heck of a winter. One of the gauges I use, we have a swimming pool in our backyard. Mm-hmm. I have to, it's been filling up. I don't drain it completely, but I have to drop it, down a few inches, because it gets up to the coping line.
Wow.
So I have to drop it down to, so it's down into the skimmer, and so that's about, probably a few inches. Oh. The tiles are 6 inches, so it's about 4 inches or so, and I've done that 6 times already this year. And so in a good winter, I might do it 2 or 3 times. So that's kind of one of my gauges. It's been amazing. It's much needed and appreciated, and we're very thankful that we're getting the rain, and we're in great shape. So I hope it keeps up.
It's good to hear it.
All right.
Hey, thanks for calling in. You betcha.
Okay, thank you for your help. Take care, Larry.
Oh, it's my pleasure. Okay, we're going to open at 20,000 here in the Dow, back to around 20,020. I wanted to bring to your attention one of the markets that has been weaker. This is the one that led the market up, which is the IBB. Let me get this up here and take a look at it, because you'll see here, this is a daily chart of the IBB, and it has been weaker. As you can see, we've had these 135 patterns this morning. We are coming into one. I don't know how high 5 is going to be, but if it gets above the 138 level, it would certainly not be a valid 135. I don't know where the Russell is going to be trading this morning. It's been a little bit behind the market, but if it's anything below 137 on the opening and then sells off, that would be a very, very interesting pattern, because we're going to open higher, and of course the first half hour to hour is going to be the wildest time of the day at looking some of these. If we look at the New York Stock Exchange Index, you'll also see that we did make a new high yesterday, and that means we're going to be higher again today with the Dow up another 100 points plus. That means we're probably going to extend to the 1.27. We're in the zone now today between, in fact, Norm Winsky alerted me this morning that we're in the zone for the new moon between Wednesday, Thursday, Friday, and then of course we're coming in Monday. Everything would be, if there's anything going to be happening, it would be in the markets on Monday. So we will watch that extremely closely. I've had a request to take a look at the TLT. This is something that we were long a few weeks ago. We got out of it when we completed the ABCD, and it's right here. Let me get it up here so we can take a look at it. And you'll see all we had is we didn't even have a 382 retracement, which is, we've been saying for a long time that you see back there in July with that big butterfly pattern or 3 drive pattern that we had there, that was the top in the bond market, folks, and the note market. And we have had very similar rallies here. We had one last September, and we just completed another one, and so this market is heading lower. We're looking at higher rates, and that doesn't have any effect on the stock market because they're different markets. That's the key thing to remember. So let's take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of the updated gold chart. As you can see, we're heading down now towards this 1185 level. I'd really like to see this come in ideally come in around Monday. That would be the ideal situation. Everybody's got their party hats on. We just hit 20,000 in the Dow, and I guess the next stop will be 21,000, 22,000, 23,000. We'll see what happens. Anyway, let's take a look here at something I want to talk about, and that is fundamentals. Let's just look here, go back in time here, and we're going to take a look at something. I want you to see this, folks. 2030, we just hit 20,030 in the Dow. So, well, interesting. This is the chart of Deutsche Bank. And if you'll remember, when we were down around in September, we were trading at 11.08 a share, as you can see. That's where we had the 1.618 expansion was there. We had a 3 drive to a bottom pattern. And if it went below $11, folks, it would have had no help at all. But right now, we have gone up and we've touched the January high for the year today. Believe it or not, in Deutsche Bank, we hit 2052 earlier this morning with the DAX being up. That completes a 3 drive pattern on the daily. But what I'm trying to say to you folks is when they were giving us all this stuff about how bad Deutsche Bank was, don't fall for it. Look at the patterns. I mean, that's the sum total of all the buyers and sellers in here, and that's the real key, to be watching this. So remember it was too big to fail. Yep, that's for sure. And yeah, Peter, you got a good sense of humor. I like that. Okay, we will watch here the market here in general. Let's just take a quick look where we are. We're still making new highs in the DAX. Still making, the S&P's got up to 2286. There should be some resistance at 2288. That's a 1.618. But we're already above that, of course, in the NASDAQ. The Dow Jones, of course, has gotten to the 20,000 level. I don't know if it means very much or not, but that remains to be seen. Part of this, of course, is a rallying in some of the financials due to the fact that J.P. Morgan just became a custodial broker for BlackRock, which is over $1 trillion. So that makes their stock go up a little bit. But we'll keep an eye on these as to see what's really happened. Goldman Sachs, which has been the leader of the pack all the way up. We'll just take a quick look at this. I want to update it to see where we are because I haven't heard my limit minder go in yet, but we will hear it soon. Let's just see where we are. Oh, it hasn't done much at all. Hold on. I wanted to show you Goldman Sachs here because this is the one that led the market up. And we are back to where the highs were yesterday is where we are. That's what's got us over to this level. And then we'll see, where we are at this level right here. So anyway, you see that we went and touched the old lows from back in the December the 14th. That was also, it couldn't even make a 382 retracement. As you can see, the 382 retracement comes in at 237.22. We might do that in a few minutes, but right now that's what we're looking at from the longer term perspective in this. When we take a look at the notes, I wanted to show you where we are starting to break down here. Since we looked at the TLT, we should take a look at the notes. You'll see here again, we've come down and made a 61% retracement, but we're already breaking below that. This was done about an hour ago, and we're starting to break down in both the notes and the bonds are breaking down, which as they should, because interest rates are going higher. And remember that the stock market doesn't care anymore. I mean, I don't know why the Fed was doing all what they were doing because the market never really does care. So we'll see what's going on, with that. So thank you very much, Marshall. We'll see what happens with these. Okay, now as most of you know by now, that one of the things that I've been watching is the volatility index because of all the technical things that I see. And of course, Sarah's in the kitchen now preparing some really delicious crow pie for me. It's one of my favorites. The secret is to put a lot of garlic and cream sauce in it to take the taste of the crow away, but that's the way it goes. The good part of this trade is we're only risking $144 because that's what the call was selling for, and we still have 7 weeks to go. I remember one of the trades of the year that I had, this is going back 15 years or so ago. I believe it was in the soybean market. I was again very early. I was a couple weeks early in the options that we bought. We bought them for like $3, and they got down to about 40 cents. And I got one of the most vicious letters I ever got in all my years of doing this from a dude out of Spain, out of Malaga, Spain. I'll never forget. Anyway, he was just chastising the hell out of me, and I told him, I said, there are no guarantees. I mean, I thought it was going to work. I said, we still have 5 weeks to work, and it's got a chance. And he said, no, I'm going to give up on it. And then the next day, he sent me another letter saying that he put everything that he had into the thing. And I said, how much was that? Well, it was only like $4,000. So, he was young, so I didn't make any difference. Anyway, 5 weeks later, that option had made 5 times the money that we had started at it. So even though these things are going down now, they have a tendency, because they go one direction very quickly, as Isaac Newton said, they can go quickly the other way. The only thing we had going for us on this trade, besides all the technical stuff, was the fact that this was a very, very low risk trade. You didn't have to risk very much, and you had time to work with it. And I usually don't like options, but on this particular one, I liked options. So we'll see what's happened. Let me double check here what we're watching here, because I want to see what's going on here with the IBB. Hold on, I think that was it. Yeah, I think that's what I was watching, wasn't it? No, the IBB is still in a downtrend. Wow, it still looks terrible. No, it was the IWM. Hold on just 1 second, boys and girls. Let me get this up here. I want to see how much it was, how much it violated the number. Yes, it did get above the 137 level. Let's see, that would negate that 135 pattern for sure. Well, it's still below the one from January 3rd, but it would not be a 135 pattern, so you can't really do too much with that from this level right here. Okay, we've got the bonds going down, gold's going down. We're down to 11.93 now. See, now we're only $8 away. I don't like this, and I'm basically on the short side of the gold. I mean, I think that we're going to pull down into that area, but I don't want to get there that fast. That's the bottom line. So let's just keep in mind. Oh, question from one of the listeners last night. He asked what was one of my most memorable trades. I've told you some of them, but if you had to put me in a make me a deal that I couldn't refuse, like they did in The Godfather, I would have to say it would be the gold trade in October of 1980 when I was at Drexel. Gold topped in January of 1980, and it broke $400 in a matter of a couple of months. Actually, it was faster than that, I believe. I think we went from 860 to 4 something really quickly. And then over the next few months, we rallied back to a 61% retracement with a perfect Gartley at around 700 and change in October of 1980. And I was living in Westlake Village at the time. My routine was I would wake up. I'll cover that when we get back, but it's an interesting story. You might like it. It'll kill some time. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we were talking about my most memorable trade in all the years. There were a whole bunch of them, but if I had to pinpoint one, this would be it. It was October of 1980. The market had topped in gold. In January, we'd rallied back to a 61% retracement. It was a Gartley. I was running the hedging up. Well, it was basically a hedge fund. This was before we had hedge funds. And I basically was running about $20 million, which was a lot of money way back in 1980. And I was short 400 contracts of gold at, I believe, 700 and change. I forget, it was 717, somewhere in that ballpark, and had a $4 lead in it going into Friday. And of course, this was Monday morning, and every morning I would go into the shower. I had a little radio in the shower, one of those. I don't even know if they make those anymore, but it was. I would listen to the news on the radio for channel 1070 in LA, and I would listen to Charles Osgood. He would give the morning gold fix, and he started out. I was in there shaving, and he said, "Ladies and gentlemen," he said, "Iranian fighter planes have hit the nuclear power station in Iraq. War has broken out in the Middle East, and the price of gold is soaring. I'll be back with you in just a moment." And then it was like forever. I mean, I don't know how long the commercial was. It must have been one of those 45-minute commercials. All I could think of was, oh my God, it's going to be $100, $150 an ounce against me. I immediately calculated that I was probably going to lose somewhere between $5 and $6 million on that day. And I said, oh my God, here we go again. I'm going to have to suffer through what I did in 1974. And I mean, I didn't know whether to take the razor and use it from ear to ear. I quickly finished shaving. I just threw on my sweatpants and stuff. I didn't even bother to wear a suit and tie. We could wear anything we wanted on Friday. It was casual day, but the rest of the time you always wear a suit and tie. And before I could get out of the shower, I was trying to listen to see what was going on, but the commercial was too long, so I said I don't even want to go through it. So I got in the car, and it took me about 18 minutes to get to work. And by the time I got to the 101 freeway heading there, I could hear KNX was on, and Charles Osgood was on again, and he said, "The price of gold in London is soaring." He says, "It's up $2.65. And I couldn't believe what I was hearing. And we don't have overnight markets. We don't have cell phones. By the time I got to the office, which was 15 minutes later, gold was down $22 on the opening, and it never looked back. And it ended up being one of my best Januaries. One of my best months ever, that October of 1980. But that's what I went through. Here you had this fabulous news to be long gold, and look what happened. They just took it and shoved it, where the sun didn't shine. So keep in mind, folks, that sometimes they go up and sometimes they go down. So remember that it's very, very important that the news doesn't always follow the trend. We saw this just a few minutes ago when I showed you the chart on Deutsche Bank. I mean, look at they were ready to fail. You saw in fact, I even posted it to show all the different things that could go wrong with Deutsche Bank at that time, but it was right there at the 1.618 level, and at that point, that was the one that was able to hold it, and we'll see whether that is going to be the case or not. So remember, the news follows the trend and not vice versa. So we've been substantially above the 20,000 level now for at least 15 minutes. Remember, the first hour is amateur hour. I don't believe that we're going to be looking at anything really spectacular if it goes through 20,000. It didn't make much at 16, 17, 18, 19. So whether 20 means anything or not, I'm not actually sure, but we should keep an eye on it no matter what. So we want to watch this very, very closely. Now, the really one to watch here is the euro, because we're going all over the map here. Recently, we've tried this 107.50 level 3 times now over the past 36 hours. We've had a lot of resistance up in here. That tells us that this battle that we have going on in the U.S. dollar is certainly for real. The key levels here to watch here in the U.S. dollar index, and we'll bring it up here to take a look at it, because this is where the real money is. It's not in those contracts like the S&P and the NASDAQ, but you'll see this level at the old highs at this 98 and change level is going to be very, very important, but we could still get, we're probably trading around the 101 level in the dollar index today, but this is still in the midst of a very, very tight trading range at a high level in the dollar index. So we should be aware of that. Remember that the things that are going on in the Dow Jones, folks, are related to just a few big stocks. You have to pay close attention to that. And the other thing that I really think means a lot is the fact that we had a drop in open interest in the NASDAQ futures, the mini NASDAQ futures. And remember, the mini NASDAQ futures, they trade about 1/10 the volume that we have in the E-mini S&P. The E-mini S&P did not have a drop in open interest. If it had a drop in open interest, I would have issued a huge sell signal, and nobody would have paid any attention to it, but I would have done that, because when you see that, it's just a matter of time, because the fact that once these people don't have new buyers coming in, they follow their own weight. We saw this in many different markets that we're watching. So that's the real thing. You can't use open interest in stocks because, for every buyer there's got to be a seller, but there's borrowed stock and stuff like that. But, remember, when you see open interest dropping and prices going up, that is the end of the short covering. It could last 5-6 days, maybe a couple weeks, but the end is near. It's just a matter of the time to watch it. That's the key thing. So we got lots of things on the plate here. We got down to 1192 and change here in the gold. I would really be a really strong fan if we could hold this gold market here and then not make our lower low till 1184, maybe on Monday. Which will be coming in here on the that'll be the 30th. That would be an ideal time. We've got the New Year, Chinese New Year, the year of the rooster. So we will find out how that will work out also. Okay, those are the main things in the currency. The British pound, we're still having, the British pound is very important, folks, because we did break above that 125 level by a pretty good amount. We backed off by a little bit. We got up to 126 in the British pound. That's another one that, we have Theresa May coming in here, and there'll probably be some type of positive announcement because they don't have negative meetings if they can help it. And we'll watch that, very, very closely. But as you can see here, we did get above the 78% level in the British pound, which is actually a bullish phenomenon. And, we got to 126.10 last night, which is above the 78% retracement of the high in December. So that is beginning to look like a positive bias. So watch the pound on a pullback because it's going to be a very, very interesting one, to watch very closely. I want to update the euro here before we take the break, and then we'll take the break here. Here's the euro, folks, and you'll take a look at this.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to wind this up. The main things to look at today is the fact that I've just posted the chart of the euro. You can see that it has been here for 3 days at 107.50. Haven't backed off much, haven't popped above it. But if we get above 108, this tells us that we're looking at a weaker dollar. And that should be good to gold, but these markets have a tendency to sometimes do a little bit different things that we might want to watch. So let's watch it very, very closely in here. We're above 20,000 in the Dow. We'll see how it stays at there. If we go below 20,000, whether it means anything or not, the fact that it hit there, I don't know. They have to have something to talk about because a lot of the politics stuff is over. So that's my guess of what they're watching. But the markets that I'm following, of course, are this euro contract. I'm watching the Dow here at the 20,000 level because if we get back below 20,000, I think that would be a good place to sell it short with a stop above today's high, which would only be about 60 points. So you'd be risking, roughly about $300 in the Dow E-mini if it does that. So, but make sure that it does it. It's got to get below the 20,000 level again. And I'm just looking at from a technical basis that we did make a new high, but we didn't do anything really spectacular. The key level to watch is the 2288 level in the E-mini S&P. We've been to 2287.25, but we have a pretty strong number. We're not very far away. We're only half a point away. So that 2288 level is going to be very interesting. And if you're going to look at something like that, what you want to do is to risk no more than 5 points. So you'd put your stop at around 2293. So those are the ones that I'm, sort of keeping an eye out this morning. The gold has got, that's on the radar, folks. I just on the long-term picture on gold, it just looks really, really interesting. We've had a pretty good day so far today. Let's see how much the Dow is up. Dow's up 103. The S&P's up 12. The Nasdaq's up 36. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.